So Picton invests in commercial real estate across the UK. Our aim is to be one of the consistently best performing property investment companies investing in a diversified portfolio of real estate assets. We've had a good 6 months. The profit for the period was just over £30 million. We delivered an underlying total return of just over 7% over the 6-month period, and we're doing quite well against our strategy. The performance over the period was in part driven by where our assets are within the UK. We have a strong weighting to industrial warehouse logistics. Also, the portfolio is biased towards the southeast of the UK, and we've seen good performance coming from those assets. We've improved occupancy over the period, which is good. That shows letting success. And we've seen like-for-like rental growth and rental income growth over the period. Our returns have been good over the last 6 months and ahead of MSCI IPD. Pleasingly though, they're actually good and ahead of that benchmark over 1, 3, 5 and indeed 10-year time horizons. The reason behind that, I think, is down to multiple factors. Firstly, it's about being in the right markets, and with our diversified approach, we're able to change sector weightings and move allocation of assets over a period of time. Last year, for example, we divested from a number of London assets and have invested more into the regions. Secondly, it's around what assets you own. You know, we're firm believers in owning good quality real estate rather than just owning in a particular sector. And then in addition to that, it's about how you interact with your occupiers, what you do to the assets through your period of ownership. We very much look at life through occupiers' eyes. We have a sort of occupier-focused, opportunity-led approach. And very much what we're doing is working with occupiers, delivering space that they want to occupy. And if you do that, you have good occupancy. And if you have good occupancy, you have good returns. So by way of background, Picton was established in 2005. And at that time, there was no REIT legislation in the UK. So the efficient way to be structured is as we are currently. The government, however, is introducing and indeed consulting on legislation around non-resident landlords such as Picton, and it seems to be the sensible way for Picton to move forward if there is a change in legislation is to enter the UK REIT regime. In terms of becoming a REIT, really that doesn't involve any change to business strategy, the way we approach the portfolio, the way we approach our assets, or indeed the way we really run the business. What it will mean is that management and control of the business takes place in the UK. There are various rules concerning the REIT regime, the principal one being around distribution requirements. But as Picton is a high income payer anyway, we don't think that will have any negative impact. There's no plans to change the quarterly dividend cycle, the quarterly reporting cycle, and very much for us it will be business as usual. And indeed, a number of our competitors have already converted to a REIT in previous years, so this feels like a natural progression for us. In terms of the property market generally, what we're seeing across the board is generally good occupier demand against a backdrop of reasonably limited supply of commercial floor space. There are clearly markets where there is more supply, and clearly there are markets that are under. So it very much depends about where you're invested. So in terms of our own portfolio, with quite a high bias to the industrial sector, having increased our exposure to the regional office markets in recent years, we feel we're in quite a good place. Occupancy is high in the portfolio, but there's still scope to grow income through leasing some of the opportunities that we have in the portfolio. Rents, we think, are going to continue to move forwards. I think against a Brexit backdrop, things aren't going to get carried away. I think that has a dampening effect, but nevertheless, what we've seen over the past 18 months is generally good activity, and we expect that to continue in the coming months and years.